What you know about futures? What you know about futures? I'm studying my futures, boy, I'm gonna get it. There is like a 1 year, 2 year learning curve. You're not just gonna, you know what I mean, get money like overnight, you know what I'm saying? You might just lose money overnight, and I'm not about losing money. So I'm gonna take my time and study and learn all my shit right, get all my shit right, you know what I'm saying? But I'm gonna figure this out. My futures trading. Because I figured out the basics already. Now I just gotta classify the details, you know what I'm saying? And early on, about 2-3 months ago, I realized that there's only four products to trade on the entire stock market. You know what I mean? You need to simplify things so that you understand them, right? Simplify things to the basics. The first thing you need to learn in any industry is the basics. And there's only four products. There's stocks, index funds, and then there's the derivatives. The derivatives are futures and options, which are very similar, you know what I mean? But futures have more risk and more reward. And they're slightly simpler because they don't have a time factor. Well, they do, but the time factor for futures trading is slightly more simpler to understand than options trading. But we're not gonna get into all the complications. There's four products. There's regular stocks, regular indexes, right, on this side, and there's the derivatives, right? Futures and options on this side. There's only four products. So once you understand there's only four products, you need to realize, you need to figure out what of these products am I going to specialize in. You're gonna specialize in one of them and then have another one as a backup. So for me, I'm gonna specialize. I realize that what fits me best is I'm gonna specialize in the one that has the most rewards, the ones that has the most money, which is the futures. It also has the highest risk. And I'm gonna specialize in the one that has the least reward and the least risk, stocks, the regular stocks, not the index funds. So I'm gonna pick the two extremes of the spectrum. The easiest one in the beginning and the most expensive and the most rewarding and the most risky at the end. I'm gonna pick the regular stocks and I'm gonna pick the futures. The futures is obviously the most complicated. So regular stocks, I'm gonna figure that out later on. You know what I'm saying? Because that's simple. Futures is the most complicated, so that's what I'm studying the most. And the most important thing I'm doing the same thing with the futures. There's a lot of complications, but I push all the complications to the side, and I think about the basics. Let's get down to the nitty gritty. What are the basics of futures trading? And the basics of futures trading is knowing the market, knowing what you're trading, studying what you're trading. You know what I mean? Because in futures trading, you could trade the index funds, you could trade commodities like gold or wheat, you could trade silver, you could trade currencies, like they call that Forex, right? But I'm gonna focus on what I could understand and what has the most money, the most liquidity. And that is the American index funds, like the S&P 500, the Dow Jones, and the NASDAQ, the top three. Those are the biggest index funds on the planet. So they have the most volume, the most buyers and sellers, and the most volatility, the most going up and down, right? The most liquidity, aka cash, the most money. So once I learned that in the beginning, early, like in the first week, I figured that out, right? I'm like, obviously I'm gonna go where the most money's at. I'm gonna go where the most volume's at. I'm gonna go where the most people are at. You know what I mean? I'm gonna go where the most volatility is at. Because I realize anybody could understand within 3 days that, you know what I mean, all the money made in the stock market, whether it's in regular stocks, indexes, options, or futures, it don't matter which one of the four products, the money is made in the volatility. The money is made in the difference from here to here, or from here to here. You know what I mean? Whether you're going long, whether you're betting or speculating that it's gonna go up, or you're going short. You're betting against the market that it's gonna go down. You know what I'm saying? That's where all the money's at. This is basic economics. This is basic common sense, right? So once I realized that, I'm like, where's the money at? You know what I mean? And I realized that the money's at the S&P 500, the Dow Jones, and the NASDAQ, the top 3 biggest index funds on the planet. Of course, later on you could specialize. You could learn about the Forex. You know what I mean? The British pound against the US dollar. You know what I mean? The US dollar against the Japan. You know what I mean? The currencies. Of course, you could learn all that stuff later on. You could learn about single stocks. You know what I mean? You could trade single stocks now. You could trade just Tesla. You could trade just SpaceX or just Microsoft or just, you know what I mean, with Amazon or whatever you want to be. But the most money is in the S&P 500. The most money is in the NASDAQ. The most money is in the Dow Jones. The most money is in that New York exchange. You know what I'm saying? So that's what I'm gonna trade. That's what I'm gonna learn. That's what most professionals, people who want to make money all day, every day, you know what I mean? This is not a hobby to them. You know what I mean? They learn those 3. Once I realized that all the professionals were trading that, I'm like, that's where I'm gonna go. You know what I'm saying? So those are the basics, right? Then the second thing I learned is I realized that there's different contracts to trade. Some contracts are $50 a point. For example, the S&P 500 is $50 a point for the mini contract. None of this shit is mini. None of this shit. They have mini, micro, nano. They got these names, but you got a lot of money on the line. You know what I'm saying? You got to watch your fucking money. But I don't make them names. These are the names. You got the mini is $50 a point. You got the micro is $5 a point. That means that whatever point it goes up or goes down, you know what I mean? You could make $50 per point. If it goes up 10 points, you made $500. You know what I'm saying? If it's $50 a point. You gotta know how much is each point, because each contract is different. And you gotta know what the average swing is for the last 3 days, 7 days, for the last 14 days. You gotta know how the market has been acting, because how the market has been acting is gonna tell you how the market is likely to act today or tomorrow or in the near future. You know what I'm saying? Once I figure that out using AI, you know, you gotta use AI. You gotta use whatever technology you can. I started reading articles, watching videos, and I realized, you know, this is not gambling. See, a lot of people, 80%, especially in the riskier products, you know what I mean? Like the futures and options are the riskier products. 80% of people in the options and futures lose their money. 80%. I'm like, whoa. This shit is risky, son. Because 80% of these people, they see this as gambling. You know what I mean? They just hope. No research, no plan ahead. They just they're just going by. All they sell. With no strategy. You know what I'm saying? But that's not me. Uh-oh. I thought I heard niggas. I thought I heard Muslims. I thought I heard, you know I stay paranoid, boy. But that's not me. That's not me at all, boy. I'm going to figure this shit out. And I'm going to go in with a plan ahead of time. I'm going to know when I'm going to get in and when I'm going to get out before I even drop a dime. Before I bet $50, before I buy $400, it don't really matter what I buy. I could buy $5 worth. You know what I'm saying? Some contracts are only $5. You know what I'm saying? $5 a point. But before I do any of that, you gotta have a plan. You gotta study the index fund or the stock for weeks before. You know what I'm saying? At least the recent fluctuations. How has it been the last 3 days? And you can see this on the charts, or you could just ask AI. You could just be like, yo, AI, what has been the average swing in points? You gotta talk clear though. When you talk to AI, you can't put PTS. You gotta put points, P-O-I-N-T-S. You gotta write the words. You gotta talk real clear to AI because it is a computer. You know what I'm saying? it won't know what you're saying. It doesn't understand slang, you know what I'm saying? You can't be like, yo, my nigga, what's the swing? You know what I mean? You gotta be like, what is the swing in points for the S&P 500 the last 3 days? It gives you the answer. The last 7 days, it gives you the answer. The last 4, usually then I just change the ending of the sentence. You know what I'm saying? The last 14 days. And then I just copy and paste, you know what I mean? I copy and paste, you know what I mean, the answers, and I put them in a folder. Usually like the last, I would say the last week or so, the swing in points for the S&P 500 has been between 60 to 100 points. That could change. That could change today. That could change immediately, instantly. But the likeliness of it staying around 70 to 100 to 120 points is very, very likely. So once you know that the swing going up or the swing going down, going against you or going for you, you know what I mean? Depending on how you're speculating. Once you know that the swing is 100 points, you know that if it's 50 points times 100, it's 5,000. The swing is $5,000. If it's $5, it's 500 points. It's $500, I mean. You know what I'm saying? So once you know what the monetary swing will be, you know how much money you need to have in your account. You know what I'm saying? You need to have double or triple that. So if you know that the swing is $5,000, you need to have $10,000 to $15,000 in your account, and you need to know to watch out, to watch that. The higher the swing, some markets like the NASDAQ, because they have less companies, some companies like the NASDAQ or the Dow Jones have bigger volatility. They might have 150 to 200 point swings because they're more volatile. You need to know how each index fund functions, their character, their personality. You know what I'm saying? And you need to know that before you go in. You know what I'm saying? So I'm learning all these things, and I'm gonna figure this out, boy. You know what I mean? I'm not gonna rush in. You know what I'm saying? I'm gonna figure this out. Another thing is that you don't want to be trading with pressure. You know what I'm saying? You don't want to be trading with like, you gotta make this $500 today. You gotta make this $2,000 today. You know what I'm saying? Because some days are choppy. Some days there's no volatility. And when you get into a market or an index fund on a day that is choppy, when it's basing, you know what I mean, like crack basing, when it's choppy, that it's not going up, it's not going down, it's just like, you know what I mean, staying in there, just going up a little bit, going down a little bit, you know what I mean? When you get into a market that's like that, you're likely going to lose money because you don't know, nothing is clear. You don't know if it's going to go down. You don't see a trend. You need to follow a trend. You know what I'm saying? And there's no money there anyways because it's not going up and down enough for you to make money. You know what I'm saying? You're just wasting your fucking time. You need to just wait. Wait a day. Wait 2 days. Wait 3 days. If you have to wait a week, you wait a week. You have to have patience. That's another thing I learned. You know what I'm saying? But, you know what I mean? Figure out the basics and then rock down the details. Then specify on the details. You know what I'm saying? I'm going to get this. There is about a 1 year learning curve, but within a year, I would say by next summer, I'm going to have this shit locked down, let me tell you. Please subscribe, hit the like button, leave a comment, and share. Thank you.